NVIDIA earnings are the next major catalyst for markets after the close on Wednesday. The stock is already up over 85% on a year-to-date basis, and some analysts are even expecting an additional 50% gain. A little bit pie in the sky if you ask me, but it's not all analysts. As we know, Druckenmiller recently sold NVIDIA and is rotating into small caps. I suppose he's more of a believer in the rug pull. The chart does have a great technical setup for a pre-earnings rally, which we'll describe in today's episode. As always, check out the links listed down below in the description, hit the thumbs up button, and subscribe for 100K by the end of May, and stay tuned until the end of today's show. I've got 4 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY weekly time frame chart, talking about candle structure and location as we always do. In terms of structure last week, solid green-bodied bar with very minimal upper and lower wick, so not enough to read into from a psychological perspective. The buyers do a great job of closing strong near the highs of the weekly range, and this is a brand new all-time high close as well, so structurally, it's bulls on parade. If we're thinking about location on the bar-to-bar count, we do have a higher low and, of course, a higher high as well. Buyers go 2 for 2 on the weekly count. The most important takeaway of the weekly time frame chart is to just understand that the trend continues in the upward direction. We of course know that we have these higher lows, but we also now have highs, higher highs, and we've just produced a brand new higher high in the trend count. Although there is no indication of a pullback looking imminent, perhaps maybe it's an NVIDIA earnings bloodbath, let's not jinx it, but although there's not an indication of a pullback, we know if one were to emerge, we can look for a weekly higher low and not be in jeopardy of changing the weekly trend. It will remain in the upward direction. There's really 2 places that we can look for that higher low. The first one would be very optimistic, and it's more so a daily pullback here, something that's over the previous all-time high, very optimistic, a very clear higher low. The more nuanced level is a little bit lower, and it's the level we've been describing for a number of weeks now at 512.50. 512.50 can still act as a potential higher low, and the reason that this area is interesting is because of the volume profile here. We know that there is a high volume node at that area. If we extend this off to the right, this can still very much so produce that higher low, and because we're coming from the highest high, the weekly trend is not technically in jeopardy. Things would change on the weekly at least if we were to break underneath 512.50, but it seems unlikely based on the information that I can currently see. There are no Fibonacci's to consider here, there are no anchored VWAPs to consider here, but we can at least consider pie-in-the-sky targets if we're looking for extensions into blue sky territories. As we know, coming from the base of the cup to the top of the cup to the handle pullback of the cup, we've already accomplished the 100% extension of that pattern. But what if you actually come in here and measure the measured move from the top of the cup, not the pullback low of the handle? This gives us a measured move closer to 570, we'll call it for round number's sake. Now, the call is not that we're going here this week, next week, or the week after that, but as we move into blue sky territories, it's at least something to consider. Once again, that's 570. There's another measured move target we can take here from a bull flag perspective. We're going to use the beginning basically of the year as the anchor, not only because it's the beginning of the year, but it's the only time in this trend count, aside from this pullback here, which is basically the flag, where we offered a lower high and a lower low. If we come in with the fib from here up to the top and pull back to the base of the flag, you can see that we're sitting at the 61.8. Wouldn't really read into that too much here. That's not, when it comes to extensions, that's not the primary outcome, but the 100% extension is just near 550. 550 again is not the idea for this week, the week after that, or even the week following. However, it's a possible target to consider. 550 is also a nice round psychological number as well if the market is going to continue in the upward direction. The main takeaways here on the weekly time frame chart is that the buyers remain in control, and there are certainly places where we can still achieve some sort of higher low pullback. Let's take it on down to the daily time frame chart, and we'll firstly evaluate this week's expected move. Here it is up here. If you're not familiar with this study, check out the video tutorial in the top right-hand corner. If we're contained by the upper bound, the number's at 535.15, implying a higher high and a brand new all-time high. And if we're contained by the lower bound, the number is 523.75, implying a huge higher low. When it comes to trend out of the daily time frame chart, we know that we have lows, higher lows, higher lows, and we've not fallen into an hourly downtrend here. We did not get an hourly downtrend here. We're just starting to get an hourly downtrend off of the all-time high. So therefore, a higher low is certainly acceptable. And the market, as we know, has made it very easy for us, right? Basically, what we want to look for is a higher low anywhere above the previous all-time high, as we were just alluding to on the weekly time frame chart. It's really the more optimistic daily pullback, if you will. So how might that happen? Well, we started to produce an inverted hammer. If we're underneath this area, which we'll see more clearly on the hourly chart in just a second at 5:30, the daily objective is to get a slow drift into the gap fill reversal from the Wednesday gap up from CPI, a test of the previous all-time high. It's the lower edge of this week's expected move. It's also loosely correlated with the top of the two-day balance from over here, which we broke out of into the end of day on that Tuesday session. So the name of the game on the daily is, can we get a higher low in this area and then trade it back in the upward direction for an equal high, then trend continuation to the upside for that weekly continuation as well. I will change my tone on the daily time frame chart when and if there's a breach of this level with a lower high underneath. Your line in the sand there is going to be at 522.75, a lower high underneath, and perhaps we start to target the weekly line in the sand that we were just describing around 512.50, but I don't see it as being a high probability outcome. You'll see why as we get into some supporting evidence today. Let's go ahead and take out a Fibonacci before we move on down to the hourly time frame chart from the bottom of the move up to the tippity top. Do we have anything from a 38.2 perspective? The answer is not really. If we find support around this area here, it's well above the 38.2. This is very, very healthy bull flag consolidation. If we come in from the recapture of the weekly line in the sand to the high, notice that the 38.2 is tangled up in the gap fill reversal as well as confluence with the previous all-time high, once again supporting via confluence that looking for a reversal around this area is top of mind. Remember also, it's just been gap and go, gap and go, gap and go. Momentum buyers are in control of the market. Let's take it on down to the hourly time frame chart and see what else we can learn about this market as it's been moving in the upward direction. So you'll notice that the small hourly downtrend is beginning here, but it's nothing aggressive. And I specifically want to focus on the end of day liquidation break from Friday's session, right? So sure, we have this lower high. We of course have lows, lower lows, and lower lows into the afternoon of Friday. But if you had stronger sellers entering this market, you would have expected some follow through underneath the bottom of the early morning consolidation on Friday. But where did we actually close? Back up near the highs of that consolidation. Even put it this way, if momentum buyers did not want to hold risk over the weekend, God forbid there was some sort of headline that, oh my goodness, markets trade aggressively lower come the Sunday open, there was no aggressive exodus, if you will, into the Friday afternoon to cause a deeper pullback. So once again, if we're thinking about who's in control of this market, it's certainly momentum buyers, not aggressive sellers or people, just looking to take profits aggressively. It's a very mild move to the downside. So what does that leave us with? Early on in the week, if there is a test here and a rejection at 5:30, I'd be thinking, yeah, you could possibly set up some shorts that look like this, looking for that pullback to continue. First target would be the Friday low of day. And if you could balloon that into a deeper pullback from the daily to get us down here, then so be it. If there's a recapture of 530 in the upward direction with a higher low, it's bulls on parade. We've already described how momentum buyers are in control. I would likely imagine at least a test of the all-time high, if not follow through in the upward direction. If the market does yield some sort of pullback to get here, as we know on the hourly time frame chart, we're thinking about where's the double bottom, where's the inverted head and shoulders, where is the very simple large hourly hammer candle, where we can get involved for a daily higher low. Do not forget that the daily is looking for a higher low in this zone near 524 and 522.75 as a line in the sand. If we're really going to dramatically change our tone to bearish, we talked about it on the daily, right? You need to see a breakdown and a lower high in here. Perhaps it emerges as some sort of retest, double top, and then you're trading back in the downward direction. that would be fairly extended through the lower edge of this week's expected move, and maybe NVIDIA is the catalyst for that. We'll take it in stride when and if it happens, but it seems like a lower probability outcome based on everything we've described so far in terms of momentum buyers being in control. If we want to reinforce that idea, let's take a look at the market internals. And what you'll notice over here, and by the way, if you're not familiar with this screen, check out the tutorial in the top right-hand corner. Very insightful for what this ultimately is telling us. But let's just ask the question. Do we have any indications of stronger sellers as the Thursday and Friday pullbacks are taking place here and here? Absolutely not from a volume flow perspective. Net flows on the week are up and over 500 million. That's substantial. If we look at the index score, it's sporadically positive and very mildly negative on Thursday and Friday. It's not even close to being the inverse of the Tuesday and Wednesday session. If you look at the advanced decline line in isolation, it's just tangled up near the zero line. So once again, no strong sellers, no strong sellers, no strong sellers here from a volume flow perspective. What about the tick? The cumulative is also not showing us any indication of stronger sellers getting involved in this market. So if I take a closer look at that Friday session, once again, I want to reinforce the importance of this liquidation break into the afternoon. I'm confident in calling it a liquidation break because we did not have bearish internals, we did not have bearish internals, and we did not have bearish internals. The move is fast on rapid tempo. It breaks down underneath a key area, and then it's instantly retraced and some in the upward direction. Think about it. If you're a stronger short, what do you want to see into Friday's afternoon on this liquidation break? You want to see a lower high underneath the earlier morning consolidation, and it simply does not take place. So once again, internals here totally side with momentum buyers being in control of the market. Let's take a look at the market profile. If you're not familiar with this screen, check out the video tutorial in the top right-hand corner. We will firstly concede that yes, on the Thursday and Friday pullback, value did technically shift lower from Friday compared to Thursday. This is a move in the downward direction. However, let's think about where we're at in the grand scheme of the small C period single prints from the Wednesday breakout. If I do something that looks like this, notice your J period liquidation break goes directly to the single prints. And where did we close? Higher in the individual session. The value area is higher in the individual session. There is no acceptance in that J period liquidation break. So once again, just a quick snap to the downside, it's not aggressive sellers. What else do you notice about the profile? Well, J period is great excess at the lows. M period is great excess at the lows. What do you see here at the all-time high? Lack of material excess. So a poor high, if it needs to be repaired, could be a possible target and a reason to make a move in that upward direction. As we know from the SPY hourly time frame chart, the way to get there is by offering a higher low over 530, trade into the all-time high, and possibly look for the repair going into blue sky territories. The name of the game in the S&P 500 is remaining bullish until proven otherwise. The daily has a strong opportunity for a higher low in here. If the hourly momentum is going to pick back up, we know about 530 in the upward direction, and the only time that we are more aggressively changing our tone is when and if, perhaps NVIDIA is the catalyst, we see a lower high offered underneath 522.75. Changing gears to the QQQ NASDAQ 100 on the weekly time frame chart, what do we see here in terms of candle structure and location? It's a ton of overlap with the S&P, so let's simplify. Bullish in terms of structure, bullish in terms of location, new highest high in the trend count, no indication of a pullback looking imminent, but as we know, if something were to emerge, a higher low can technically be found without jeopardizing the weekly trend. Your two key areas out of the QQQ NASDAQ will be the previous all-time high in the top of the 7-week balance range. That level is at 449.31. And of course, that would look something that looks like this. That's very, very optimistic and very, very bullish on the weekly time frame. The deeper pullback is respecting the bottom end of the 7-week balance range at 433.75. That potentially looks something like this in the upward direction in both instances. It's a higher low over this breakdown from, of course, the April pullback. We also know that just like the S&P 500, this is being reinforced by the weekly volume profile. You can see the high volume node going directly through the base of the 7-week balance range, and we are building out a new secondary high volume node inside the midpoint of that balance range. So the main illustration is still that some sort of higher low in that zone keeps the higher time frames bullish. That's the main takeaway here. In terms of measured move, we have not actually completed the cup and handle measured move, unlike the S&P 500. So let's come in from the base up to the top to the low of the handle pullback. And what you can see is that measured move is still sitting up there around 475. That's the round number that we've been using over the past couple of episodes episode's main takeaways on the higher time frame weekly is that buyers are in control and we can look for higher lows or continuation in the upward direction without jeopardizing anything in terms of structure. Here comes the QQQ daily time frame chart. What do we see out of the weekly expected move first? Here it is. The upper bound is going to be at 459.20, implying a higher high and a brand new all-time high. And the lower bound is going to be at 442.27. That, of course, is a massive higher low. So expected move does strike me as being bullish for that reason. If we're counting trend on the QQQ daily, we have lows, higher lows, higher lows. And just like the S&P, this was never technically an hourly downtrend. This was never an hourly downtrend. This is the very early stages of an hourly downtrend. Again, very mild, just like the S&P 500. And of course, it's coming from the highest high in the trend count. The trend is up, and we can afford a daily higher low. The most optimistic daily higher low, as we just described on the weekly time frame chart, would be respectful of the previous all-time high here. That level, once again, is 449.31. You're starting to get a hammer candle printing off of that on the Friday session. So buyers are already stepping up on the retest of the all-time high. If we were to get consolidation here, your break and higher low over 452 could yield new all-time highs and blue sky territories. The upper bound of the weekly expected move could act as a potential intra-week target there at 459.20 as we move into those uncharted territories. If the market's going to pull back in the QQQ, you're simply looking for a breakdown and lower high underneath the previous all-time high, aka Friday's low. If that takes place, you're certainly still thinking about a daily higher low in this zone right here. Lower edge of the weekly expected move, 442. It's the top of the 4-day balance range from over here. The bottom of the 2-day balance range from over here. That's Friday of 2 weeks ago and the Monday from last week. We broke out on Tuesday. And the top of that range is the top of the Monday session, the top of the Friday from 2 weeks ago at 444.50. My preference would be to see 444.50 act as the higher low and not fully require the test of 442. But on the daily time frame chart, we can give it a little bit of breathing room around that zone. If there's the pullback, looking for a daily hammer, something that does this, hourly double bottoms in this area, inverted head and shoulders, the whole 9 yards goes around this zone for that daily higher low. The time where I change my tone on the daily time frame is clearly a violation of that area with a lower high underneath. Maybe there's a short to get into the bottom of the weekly balance range, that line in the sand we were just describing at 433.75. Now, when we get down here, it's once again putting your thinking cap on and saying, okay, can we spot a weekly higher low via some sort of daily double bottom, something that does this and perhaps is a little bit more drawn out? We wouldn't be as attached to hourly reversals there, although reversals have to start somewhere, right? So that's the name of the game on the QQQ daily. Once again, your inflection points that are really going to be in play early on in the week will be the previous all-time high, 449.31. Above is bullish. This is your possible trade setup there. Below, possibility for a pullback, but thinking about daily higher lows around this zone. We'll just use the line in the sand there at 442. Let's go ahead and take out our Fibonacci's from the bottom end of the move up to the tippity top of the move, and you'll notice that the line in the sand we've described structurally at 442 is above the 38.2 Fibonacci, technically classifying that as bull flag consolidation. I also want to come in from the low of the Tuesday session up to this high, and yeah, would you look at that? The 38.2 is almost spot on with the previous all-time high, meaning that if you do get consolidation up here, this is nothing more than very short-term bull flag consolidation, looking for higher over the course of time. Once again, momentum buyers are in control happening here with the gap and go. We repaired the structure on Wednesday's morning session. The sellers were unable to battle for price acceptance inside of the Tuesday range, and obviously we went on to make a new all-time high, speaking to the idea that momentum buyers are the ones in the driver's seat even out of the NASDAQ. Here we go on the hourly time frame side of things. What do we see? Once again, sort of building the argument for 444.50 acting as the stronger area of potential support. Previous resistance, resistance, resistance now has the offering of support. On the hourly chart, what that might look like is a breakdown here, lower high underneath the previous all-time high, looking to trade it into this area. This is a possible scalp. Let's bring out the boxes for our risk reward. That's a scalp in the downward direction, but as we've been very thorough in today's episode of sort of saying and reminding you, it's a scalp, but when we get down here, it's right back in the upward direction. I would be thinking about where can we get involved in longs, not only back to the previous all-time high, but the true all-time high. How can this play out as a potential range to traverse into the coming week's worth of trade. If the market is consolidating up here and this gets offered as a double bottom, so touch 1, touch 2 holding over the previous all-time high, as we were alluding to on the daily chart, some sort of higher low here is the breakout to recapture what maybe could be considered a little bit of a head and shoulders neckline at 452.50, once again trading into the all-time high and blue sky territories beyond that. If there is going to be that larger reversal, I know I sound like a broken record, but I want to be very clear about this. The only time we're like, okay, here comes a larger move to the downside is when and if there's a nasty lower high underneath 442. I'm not seeing it in the cards as of right now. Before we move along to our internals, I do want to pause and just rewind just a second. This lower high is a short that I would be very interested in. The reason I would be interested in this is because of the thin structure from over here. Notice that there's not a lot of market structure in this box as the advanced, so the breakout into the end of day on Tuesday and the gap fill reversal from early on Wednesday session. There's not much happening there. So this lower high opportunity is definitely a scalp I'm interested in. And again, we're not overstaying our welcome when and if we make it to the full target at 444.50. Let's take it on over to the market internals now for the NASDAQ side of things. You did get strong volume inflows on a bulk of the days, even that Thursday session where the NYSE was lagging a little bit. Remember, is more closely aligned with the zero line. The NASDAQ saw strong volume inflows. Now, on Friday, OPEX is going on, right? A little bit of madness from a volume flow perspective there. If you take a look at the advanced decline line, it really wasn't that bad. So although this, yes, does breach volume flows negative 400 million, I mean, the advanced decline line, sure, a little bit of a push lower there on that afternoon liquidation break, getting us negative, but nowhere close to trend lower zone down over here. What about the cumulative build out of the tick? Again, we'll give some credit where credit is due. These are a little bit more aggressive than what we saw out of the S&Ps, but on a relative basis to the build on Wednesday, it's not like those were groundbreaking reads. Typically what we're looking for is like 5,000 in the NASDAQ. Sometimes it's 6,000 net negative or positive, and the worst we had was negative 24.25. So again, you tell me, it doesn't really seem as though we have aggressive sellers at the exchange level, and here is your liquidation break. The main difference between the NASDAQ and the S&P, at least in regards to the liquidation break, is that the 100% retracement did take place, but you didn't make a new high over the top of the balance range like the S&P did. And instead here, you're just getting consolidation back inside of the morning range. Again, it's still not indicative of stronger sellers. Stronger sellers would have liked to see some sort of lower high underneath the intraday lows. It simply did not take place. So once again, trying to side more so with momentum buyers. Here is the market profile for the NQ futures. What do we see? J period, it does close the single prints from C period on the Wednesday rally. From the CPI day, yes, we will concede that there's a minor hourly downtrend in force with value area building out lower. We have a lack of material excess on the all-time high. So just like the S&P, the takeaways are similar. The auction has been complete at the lows. The lows look secure. Volume taper is nice as well, but the high lacks material excess. If we are going to trade back into that high, I would expect it to break on a first test, and then it becomes a question of, okay, do we accept above that high, or do we promptly, and this is something that you'd be watching on a 5 or 15 minute chart, do we come directly back down underneath? If we do, it's just repairing that structure and then showing you sort of a fake break to the upside. I'd be a little bit more reserved for consolidation. I still would not change my tone to being aggressively short on anything at this point in time, considering the market structure. Next up, we've got the IWM Russell 2000 small caps on a weekly time frame chart. What do we see in terms of candle structure and location? Slightly different from the S&P and the NASDAQ, that's for sure. So let's take a closer look. We've got ourselves a green-bodied bar with a little bit more of a pronounced upper and lower wick here. A bit more indecisive, but I would still give the buyers the upper hand, closing over the opening print, again, the green-bodied bar. If we're thinking about location on the bar-to-bar count, we do have ourselves a higher low as well as a higher high. Buyers technically go 2 for 2 on the weekly count, which is very interesting considering that the previous weekly bar, if we get really cropped into this, was an inverted hammer that closed very closely to the previous weekly range high, right? All of the sellers who were really banking on this becoming a head and shoulders, and don't get me wrong, we acknowledged the pattern, right? we're really looking for a breakdown underneath that previous weekly bar's low, and it simply did not take place here out of the small cap. So this, of course, is constructive in the upward direction. And once again, with Druckenmiller rotating into small caps, are they starting to see an opportunity, especially with the possibility, not guarantee, of rate cuts on the horizon? It's certainly something to be considering. We're over the weekly line in the sand, which has been our main tracking point for a number of weeks now. We know that this is possibly acting as a monthly set of higher lows. If we were to pull back out of the weekly, we can still look for a weekly higher low. If you're counting from lows, higher lows, you could still get a technical higher low at $200 to about $199 as a zone coming from the top of the range that we were just describing over here. From a Fibonacci perspective, not much has changed. We are consolidating over the 38.2, starting to build out what could be construed as a weekly bull flag in here that is constructive. And if we come in with, of course, our weekly volume profile, the more time we spend above this as a high volume node, I know there's a little bit of overlap there. Let's remove the white line so you can see it. There is the high volume node right through the 199-200 zone. A little bit of another shelf happening right here, but overall, we're trying to navigate through the low volume void into the next target overhead, and this would be massively influential to the broad market, speaking to the broadening of the market rally itself. If small caps are going to start participating in a more meaningful way, that's going to act as a tailwind for your S&P 500. So trying to remain optimistic on the weekly. Things so far are so good. Let's take a look at the XRT, which is going to be your retail sector of the S&P 500. Let's go back to weeklies. So a recapture of the top of the balance range here. Not the prettiest looking daily bar, or excuse me, weekly bar here, but it's notable that we're over 73.25. These are things that we were checking in on, right? Let's go to the XBI as well. A little bit more of a struggle happening over here with an inverted hammer actually rejecting 94, the top of the previous balance range. So continuing to watch that push and pull, and then the last one is going to be your KRE for the regional banks, and this actually is helping out the break of the resistance trend line there, trying to make a move into the equal highs here at 55 would be bullish pressure for the small caps as a whole. So I would say that your main watch right now is actually whether or not the biotechs can get in gear in the upward direction. If they can, that's going to continue to push small caps in the upward direction. Let's go back on over to the IWM. We'll go down to a daily time frame chart, a little bit of a chart, musical chairs here. There we go. There's the IWM on the daily. Weekly expected move is here. The upper bound is at 212.50. The lower bound is at 204.75. Right now, that strikes me as being somewhat neutral. Of course, the offering of a higher high, but also the failure back down underneath this 206.25. In a picture-perfect world, previous resistance, what acted as support on the Tuesday session wants to act as support again here. So daily level of massive influence, I would say, is going to be at 206.25. If we can get the pullback to mildly come into it, find a higher low there for lows, higher lows happening in here, higher lows over 206.25. That's really optimistic and still constructive for small caps. The equal high would be the target, and then continuation in the upward direction. If small caps just break big time in the upward direction, something that looks like this, the next major overhead target, remember we had a low volume void? This is kind of what that represents. Clearing this previous pivot top at 210.85, there is some room to run up into 218.50. Now, please don't get the messaging wrong here. This is not a call that we're going here this week, right here, right now. But overall, if we can start to clear this area, I would be more optimistic once again for continuation in the upward direction. And ultimately what that means for the broad market is a sustained tailwind specifically for your S&P 500. Let's come on down to the hourly time frame chart. Let's see what else we can see. You've got yourself a balance range here, which obviously broke out on that Tuesday session via the gap up. Higher low on the gap fill reversal keeps the hourly trend up with lows, higher lows happening here. It's been pretty lackluster since that Wednesday gap up. It did close the gap from CPI. Now you've just been building out this slow malaise in the downward direction. You're not really getting anything constructive over the past couple of days. So keep it simple. If you're just consolidating in here, it's bullish consolidation, breaks and higher lows over that 209.25, trade into that 210.85 we were just describing above. That's where we know things really open up. If we break down underneath the low of the Wednesday gap up, basically here at 207.75 is the faint level, that's okay. I would not be an aggressive short through here, and instead I'd be looking for the market to try to find buyers over that key daily level we had just described at 206.25. If this is the case, once again, this acting as a daily higher low is a tailwind for the S&P 500. You guys know how I feel about the Russell at this point. Really watching out for that as a possible outcome. Here are the market internals for the Russell. Very flat into the end of the week, not doing anything even on the CPI gap up. You'll notice that we were positive at the advanced decline line, at least working towards the neutral zone here out of the advanced decliner on Thursday, neutral on Friday, which makes sense, right? We really just saw a multi-day balance and, as I described, malaise in the downward direction. Nothing to really write home about, so neutral internals actually make sense for what's happening here. There's no divergence. There's nothing that we should be paying attention to, no red flags. If we break out, we want to see this paired with bullish internals. If we start to pull back, I would make the argument you want to continue to see neutral internals supporting the idea that buyers are just waiting in limbo for that higher low to form on the daily, and more aggressive sellers are simply not coming out of the woodwork to short this thing into the ground. Let's finish up the small caps with none other than the market profile. You can see that we have value area here, and here on the Friday session. So once again, the concession is that there is a small drift in the downward direction. A pullback is not unreasonable. But if we can spot the higher low, I think we're sort of in business to continue in the upward direction. The level that you would watch out of your Rusty Russell futures is going to be at 2085. We do have a poor high, incredibly poor high on the Friday session. So if you notice, and this would be a very, very classic trade. So again, I know I did this in last weekend's update, but if you've made it to the Russell and if you've made it to this trade idea as an indication for the market, let me know in the comments with another classic R2K. All right, not Y2K, R2K, but here we go. Sweep this low. So look below and fail on a now 3-day balance range, come back into the balance range, higher low over the point of control, over the value area low, whatever it may be, to repair the poor high. That's going to be bullish for your S&Ps continuing to consolidate inside of the overall balance range, well above your previous all-time high. Let's go ahead and dive into the supporting evidence now, beginning with the weekly performance of the S&P sectors. As we know, off of the lows, and I'll continue to remind you, right, this was led by utilities, which was technically a more risk-off feeling rotation. And that was kind of an issue, but notice what has happened over the course of last week's worth of trade. Who's leading on the week? We've got semiconductors up 2.79%. The XLK tech sector up 2.3%. That's the heaviest weight risk on style sector. Below is the real estate sector because it's rate sensitive, but even beyond that, healthcare, communications, these are heavier weight sectors, at least the XLV and the XLC, and definitely XLC at least, a little bit more risk on in terms of nature. At the bottom end of the barrel, the sector that's down the most this week is the industrial sector, so not great from a very cyclical rotation perspective. Same thing here with the XLY. It is a laggard, and the XLY is, we'll concede, a heavier weight risk on style sector, so not great to see it at the bottom end of the barrel, but I am pleased to announce that as we are making these brand new all-time highs, utilities are not the sector pushing things in the upward direction as much. The recovery out of semis is noteworthy. Let's take a look at the structural charts because this is ultimately what's going to drive things here. If we can stay up and over this level at 229.25, very, very constructive bullish consolidation, looking for new highs. If we break down, not the end of the world. I would really be paying attention to a weekly or daily higher low at 219.75, also supportive of the daily 50 SMA. Obviously, NVIDIA earnings will move this on Wednesday after the close, so be mindful of that. Here's your XLK tech sector, the heaviest weight risk on sector for the market, making that new all-time high in conjunction with the S&P into the end stages of this week. Higher lows are welcome over the top of this as a previous area of resistance, now possibly acting as support near the gap fill reversal. If you start to get a lower high underneath that area, that's where your deeper pullback may unfold to the weekly line in the sand out of the S&Ps around 512.50. Doesn't seem to be top of mind considering the hammer structure that built out on Friday. So bullish so far across the board in the semis as well as tech. Here's real estate. I mean, just as a very lightweight sector, I would just say upward pressure is upward pressure, gapping over the previous gap, over the neckline of the weekly perhaps double top, right? So this is bullish. It's certainly helping the market. Here's the XLV. This is either the second or third heaviest weight sector. I think it's the third now, right? We've corrected that financials are now the second heaviest weighted sector, but look at the setup, right? Bullish 3 or 4 bar play at this point. long over those highs, looking for continuation into the top of the range, I mean, to me, that's a very bullish setup. Or even if you pull back, the offering of a possible higher low over the bottom end of the range or a gap fill reversal over 144.10, this has been a big change in tone out of the healthcare sector, right? It was really lagging down here as it was putting in this bearish consolidation. This change in tone, it's certainly helping the market sustain either healthier consolidation or just more of a bullish tone near those all-time highs. Communications, what's going on over here? Small drift in the upward direction. Ideally, this gets more in gear with some solid green-bodied bars really producing some more momentum. I would say because of the slow drift, it wouldn't be unreasonable for a higher low to be found here around that 81.20 on like a couple of days of liquidation or something of the sorts. Basically trying to navigate the uptrend. As long as we're over from a weekly perspective 80, I'd count this as being neutral to bullish for the broad market. XLF, can't say enough good things about financials, the second heaviest weighted sector, as they're breaking out into new all-time highs over 42. I mean, very classic, higher lows over the previous all-time high, or right, from a weekly perspective, you've got a massive double bottom over here, retest the neckline with a higher low, it's still constructive. Lows, higher lows, higher lows. Looks good to me out of financials. This is heavyweight, it's risk on. It looks good for markets pushing to new all-time highs as well. Utilities, very interesting thesis being brought up in the comment section, and I love that you guys are having this conversation and bringing up things that I may be overlooking. Utilities, what do you guys think in the comments? Is the outperformance from utilities coming from the increased usage from data centers as we're producing AI, or at least AI is producing more demand for energy in the data center, right? That's one possibility. Crypto is another explanation. Is this sort of leg higher, reflecting the market pricing in that utilities are performing because of that? Or is it a little bit more sinister, and is this still technically a warning to say, okay, risk off is, it's definitely still there. There's some component of that out of utility. So we'll leave the commentary on that for utilities, but I would love to hear from you down below in the comment section. XLE for the energy sector, as we know, is an inflationary, catalyst, if you will, or antagonist, I should say. Back over the monthly breakout point, so this as a double bottom looks constructive. I would just look for the continued rotation in the upward direction here. Upward pressure is upward pressure, and as we know, energy services, not the biggest contributor to inflation on the last print. It was really more so transportation services coming from auto insurance more specifically. So if energy moves higher, I would tend to think it's another go around at possibly something that looks like this. So here is a break of a resistance trend line. And also don't forget this little hint over here, the monthly breakout of the balance range, right? So if this gets back up and over more firmly, that 94.25, I think energy could take another leg in the upward direction. So just being mindful of that. Here's the XLP. Let's drop it back on down to a daily time frame chart. It's a risk-off sector. It printed a new higher high in the trend count. Not new all-time highs, though, out of consumer staples. So gap fill reversal is okay. Pullback, really anything over this neckline on the weekly is okay. I'd probably be more concerned about consumer staples if there were something that did this, negating the pie in the sky inverted head and shoulders breakout. That, to me, would be more concerning. Because don't forget, although it's deep for defensive, we don't want it falling off of a cliff. So 76.25 is your big watch there. XLB Materials is incredibly lightweight, so we're not going to read into it too much. Just consolidation here. Multiple gap ups are just opening towards the highs of the previous session, fading throughout the duration of the session. I mean, just keep it simple. If you're above, it's bullish. It's helping the S&Ps. If it breaks down, it's not going to make or break things. You could still produce a higher low over 90.30. XLI, what do we see over here? Certainly the offering of a breakout into blue sky territories, being a little bit more of a medium weight sector. That would be noteworthy. That would definitely be noteworthy. Over 126 in industrials would be bullish pressure for the market. And last but not least, we've got the XLY. So this is good. As we're talking about the XLI at all-time highs, even though it's lagging on the week, I think that if this does push, if it breaks out of the consolidation range, even if your tech pulls back a little bit, it's going to dampen some of the below, just a little bit. I'm not going to claim that it's going to completely counterbalance, but a little bit of relief can possibly happen if that's the situation. Here's the XLY. It's got work to do. We know that Amazon is not stellar near the all-time highs, there it is. And we know that Tesla is also just a complete chop fest as of right now. So I'm not shocked to see the chart looking like this. I suppose holding this is okay. It's a good first step, but to me, it becomes more like, if people really lose interest in Amazon and really lose interest in Tesla, if the broad market's pulling back as a whole, I would not be surprised to see this turn into overhead supply with a breakdown under 177.75. Lower high here gets you kind of like loosely towards 175 as a possible pullback level, this low from here. So I think that the XLY consumer discretionary is more of a threat compared to a tailwind for the S&P as of right now. And for that reason, it would remain somewhat of a top watch as we move into this upcoming week Here is the ratio grid. If you're not familiar with this screen, check out the video tutorial in the top right-hand corner. This is constructive, still looking for a higher low out of the XLK. It's recaptured its 50 SMA, so trying to make more of that risk-on style rotation. If we take a look at the XLV, it's, sort of flattening out underneath a downward sloping 50 SMA, not much of a risk-off indication. Financials holding up sideways near a flat, slightly upward sloping 50 SMA. It's okay. Ideally, this gets back up towards those highs. XLY, again, Tesla and Amazon really need to do something if they're going to contribute to more of the risk-on style rotation. If we look at the risk-off names, notice the XLP is continuing to sort of drift in the downward direction, so it's not like this is screaming at us, hey, look out below, this is a risk-off rotation coming around. The XLU, unfortunately, is the exact opposite. It's sustaining these higher lows, it's high and tight. It's a minor consideration, but again, chart structure at the end of the day rules all. Noting that the XLK is just sitting right at the all-time highs, it's very difficult to look at that and say, no, markets are actually risk off. So I wouldn't fight this chart too much. Let's move along to some specialized ratios. This, of course, is back to risk on. If we take a look at this, it's risk off. No surprise considering that performance out of utility. So this would be your minor red or yellow flag, if you will, out of XLK, XLU. If we move along to apples, again, mild. It's not really telling us much one way or another. And then lastly, we've got our SMH, semiconductors versus the healthcare sector, right up towards these highs. What I would be really interested in seeing is if this breaks out to another all-time high, let's see if the market can follow suit as well. If the market does not, and this makes a new higher high, it would be bullish pressure building up in the background, in my opinion. And over time, I would maintain the bullish stance basically in the broad market down below if that were to be the case. So that's a possible divergence to watch out for. Here's the dollar. Dollar had pulled back aggressively on CPI. We know that, no surprises, but something that's a little bit more nuanced, I think is definitely worth paying attention to, is look at this flip, right? You have previous rejections then acting as support. Now look at the Friday session. If the dollar remains weak here, as we know, it's another tailwind for equities down below. Something that a lot of folks are continuing to talk about is the outperformance from gold coming into the equal highs over here around 24.15. If that breaks out, again, in theory, it puts downward pressure on the dollar, which is bullish for equities, but is it more of a suggestion of a risk-off flight to safety? At this point, I'd be hard-pressed to say yes, just based on the performance here out of the S&P 500. You could also look at something like silver really getting in gear in that upward direction, confirming that, once again, it's not unreasonable to see the dollar lower here, considering its relationship with metals expressed as a currency. Here is the interest rate via the 10-year. We're at a do-or-die location, and as we know, it's the trend line, it's the pullback. It is 4.33 out of the 10-year. If it supports here, I would be on the lookout for your next lower high, and ideally, let's go ahead and drop a level in here. We don't want to get overly technical with the 10-year. However, if you're underneath 4.45, this is a lower high, this is a downtrend, right? So highs, lower highs, possible lower highs, lows, lower lows, lower lows. Is that enough to break down on another equal low reattempt underneath 43.33? It's possible, especially considering that the market's fairly optimistic right now about rate cuts coming in sometime in September, right? The inverted ZT has backed off here. Let's take a look at the tracker tool and confirm. So there you have it. Even after last week's CPI print coming in around 3.6, you're still getting odds of a Fed rate cut as soon as September of 2024. 49% odds of that cut being in force for that particular time frame. Now, do not hold your breath, because if you take a look at the calendar this week, it's actually loaded with the henchmen. They're coming out of the word work. You're going to get on Saturday. So actually, probably by the time this video goes live, Kugler is speaking. Powell speaks on Sunday at 3:30 in the afternoon. If you're looking for some easy relaxation into your Sunday afternoon, said nobody ever. You've got Bostic, Barr, Waller, Jefferson, Bostic again into the afternoon on Monday. On Tuesday, Barkin, Waller, William. I mean, it's just nonstop from the henchmen this week. You can take a look at all these different Fed speakers as I scroll down. One of the larger indications will be the release of the FOMC meeting minutes, and that's going to be at 2 o'clock on the Wednesday afternoon session. Remember that this is already things that the market should understand based on the last FOMC release, right? So unless they've changed the verbiage in the actual write-up, then just a volatility event, little blip of volatility, shouldn't really be directional there. As we continue on down on Thursday, as always, initial jobless claims will be coming in, and maybe PMIs will be interesting on Thursday at the 9:45 timeframe. You have manufacturing and services PMIs. That will be possibly market moving as the markets open. So 15 minutes into the day, be mindful of that. Durable goods orders on Friday before the open, and just still more Fed henchmen even straight through the end of this week. So that's what we've got on on the docket, and once again, because of all of the Fed speak, I would imagine these odds to shift around drastically. I did not see Neil Kashkari listed on the lineup, and typically he is more of that hawk who is saying, yeah, I think that maybe we might even consider raising rates into the end of 2024. So I didn't see that listed, but just keep your wits about you as those folks are speaking. Here is the earnings insight from FactSet, and what I wanted to point out is as the market is making this advance back towards all-time highs, making new all-time highs, it's very noteworthy that the EPS has flipped from a flat trend here to a little bit more of an uptrend, as well as a downtrend here to flattening out, trying to get in gear in the upward direction with some sort of lows and maybe higher lows. So as EPS is moving in the upward direction, that's a good sign, especially when we take a look at what's happening. If I just scroll down a little bit further here, where are we going to get there it is. The PE ratios are also moving higher. If earnings were continuing to decline and the market was making a move to all-time highs while PE ratio was the only thing pushing this to new all-time highs, that would be a little bit more concerning, but that's just not the case based on the data that we have in hand right here, right now. One of the things I do want to point out is just the importance of NVIDIA on Wednesday after the close, right? At the company level, it's the largest contributor to earnings growth for the technology sector, right? If they were excluded, so again, I'm not going to read this to you verbatim, but 10.8% versus 23.6%. All right, so like more than half of the contribution comes from NVIDIA, right? It's the largest contributor for the entire S&P 500. So I think there's a lot of pressure on NVIDIA. They continue to knock it out of the park with beating the expectations and raising guidance as they move into the future. If they don't do that this time around, so let's say that they beat expectations, but they don't raise guidance going into the future, they're like, no, I think we've sort of topped out and we've hit maximal growth and we're just going to sort of stabilize from here on out. If you don't get that optimism, I think the market takes that as a pretty compelling sign, and I don't want to be doom and gloom, but it's very possible that you could see a breakdown out of NVIDIA. Again, I will just be fully transparent. I own it in the long-term accounts. I don't really have any plans on like dramatically altering my position, but I will not be swing trading it through the earnings announcement, and you'll see why based on implied volatility in just a moment. Here's the full run through of the calendar. After the close on Monday, you will get Palo Alto. That'll be a top watch here. Zoom is a long-lost memory of the sickness days. Lowe's could be interesting. We already have Home Depot out, of course, though, so not as interested there. Target, again, we already have Walmart out, and NVIDIA, there it is, the top dog after the close on Wednesday. Snowflake as well from a cloud computing perspective, and that's really it. Earnings season will wind down on those few names. Maybe BJ's from a consumer spending perspective is worth watching out for, but that is going to wind it down for earnings season here as we finish up quarter one. Let's get back on over to the platform. Let's take a look at some risk appetite charts and just establish what's going on. And we'll talk about that NVIDIA setup on the chart when we get to the core list of companies, right? So hold tight. We've got the bonds in relationship to themselves underneath upward sloping 50 SMAs. I'd love to see some sort of lower high produced here, and I'd be most confident in that acting as a lower high when and if we would just make a lower low, right? So a lower low, spending more time underneath these 50 SMAs would be constructive for equities down below. This speaks to duration preference when it comes to risk, right? So downtrends there are helpful for equities. Here are credit spreads in isolation, and you can see that the trends are continuing to drift towards the bottom end of the range. This is bullish. It speaks to risk on and risk appetite improving for equities down below. HYG in isolation, it played out with the positive divergence over here. You are getting a possible higher low, higher low, so all good. Nothing, no major red flags out of the HYG. Let's take a look at Bitcoin staying inside of the upper flag consolidation range. The more time we spend over 6970, that's 60,970 for the folks just tuning in via audio, the more bullish it is. And right, and of course, Bitcoin as a risk asset is going to speak to some degree of risk preference for the equity markets as well. Again, it's not one-to-one, but still certainly thinking about that relationship. New highs versus lows. Let's take a closer look over here. Mild pullback this week, but remember, we just avoided a massive look underneath the zero line. So as we're printing new all-time highs and breadth is improving, that to me makes sense. That is a bullish indication. SPX A200R, we haven't checked in here in a while, continuing to drift in the upward direction again. positive for breadth. SPX A50R positive over the 50% mark, good for our market breadth. Let's take a look at the RSP because this is where a minor red flag starts to emerge. I wouldn't call it like end of the world, but we did not print a new all-time high out of the RSP. Any consolidation up here is constructive, but this would just sort of suggest that yes, your heavier weight components were really what was driving this new all-time high out of the S&P. So you can see the same thing here out of the QQQE. Again, these divergences, the fact that we did not make a new all-time high out of the QQQE, is not enough to simply go out into the NASDAQ, be it futures, QQQ puts, NDX puts, whatever. It's not enough to start drilling this thing down and saying, you know what, markets are going to go to zero. It's just a minor data point which might suggest that you may not want to chase it up here at all-time highs. If you're not already long, you probably don't want to be chasing at the highest high, right? So that's your QQQE. Let's take a brief glance. So Dow, Industrials, and Transports also divergent, right? Lower high versus higher high happening over here. No surprises on that. Here's the VIX, absolutely floored. So you want to talk about a market that just melts up. It's exactly what happens when your VIX is floored. This is the lowest reading we've seen in years at this point. Maybe not years if we go back to, let's actually rewind this a little bit so I'm not talking sideways. It's been a while since we've been down at an 11 handle. It's just noteworthy low, noteworthily low. That's probably not proper grammar. Volatility. It's just melting away. There is no volatility in the market. We've resolved that. I would be interested in seeing not just the VVIX. Again, this is also floored here at 75. Let's move along from that grammar absolute botching of the grammar. I'm even botching that one. All right, shut up. Let's talk about charts. The one-day VIX. This is what I was getting at. If this can elevate as we head into the NVIDIA earnings call, I think that that could be a potential catalyst to sort of spook volatility into waking up off of the lows. Now, again, am I going to go out there and make a bet based on this? No. But if it starts to unfold that way, if the one-day VIX starts creeping higher just before NVIDIA earnings, that to me would be a trigger to say, okay, the market's looking at NVIDIA earnings as a possible volatility event. Once we get through it, if volatility comes back down, you're probably looking for the market to continue to rally in the upward direction. So remember, volatility crush likely means that people are unwinding hedges that were put on for the downside, and therefore your S&Ps will probably move in the upward direction. So a technical relationship, a mechanical relationship, but something to be thinking about as we come into this catalyst that everybody and their mother's brother's goldfish cousin second removed is watching from the 2-gallon tank. Apple is up first on the core list of companies. Daily time frame chart to start. What do we see out of the price action? Certainly the beginning stages of a rejection off of this 191, which is a historical level. Wednesday's high of day, upper wick. Thursday's an inverted hammer. Friday is an inverted hammer. If this breakdown does ultimately take place, we'll take a look on the hourly in just a second. But from the daily perspective, I would be thinking about a daily higher low over the top of the earnings gap up range at 186.65. I also want to point out, if this does become an hourly bull flag and we break out, there's really thin structure through this volatile breakdown here that the next major overhead target, it seems like it's eons away, but 194.50 makes structural sense from what we had back here. Here we go. Down to the hourly time frame chart, you can start to see what I was referring to as a possible bull flag. So sure, if this is going to be your classic flag, so be it. Break and higher low over 191. Longs here, tight risk reward, looking for that continuation into the target we just described at 194.50. Because of the inverted hammers, because of the upper wicks we were just describing Wednesday, Thursday, and Friday, I'm actually more interested in looking for something that does this and getting the thin structure retracement earlier on in the week based on some sort of lower high here underneath 189.60 for risk reward that does this. When we get down here based on the daily analysis, thinking about reversals off the top of the earnings gap up range. Once again, that key level is at 186.65. Next up, Microsoft. What do we see out of Microsoft? Let's go daily time frame chart. There we go. And zoom in a little bit more closely. Notice that the balance range had been infiltrated based on the Wednesday move to the upside. And on Thursday, certainly looked over the high of Wednesday, closed a little bit weaker, but notice that this pullback on Friday technically found buyers on the retest of 419.25. So we've infiltrated. Now the higher low above sets up basically the rotation to the top of that range, which as we know is the all-time high out of Microsoft. So daily key inflection point has to be 419.25. If above, looking for longs to the top of the range. If we pull back on the hourly chart, this breakout point right here is top of mind at 415.25. Let's see that as we move on down now and change this to a zoom. There we go. So if the buyers can step up here, I would love to see it. I'm just not seeing the pattern currently based on Friday's session. It was a very, technically speaking, they tried to hold up in there, but we didn't see a huge reaction off of 419.25 for like a recapture of an intraday VWAP and then a trend back in the upward direction. Just didn't happen. So the way I would envision it going forward is, does this turn into some sort of double bottom? Another test in here, a break over this neckline's maybe interesting, back up into the highs of the Thursday session, then follow through. That's if 419.25 holds. If it breaks down, obviously lower high here, I probably wouldn't. I'd be more interested in the Apple short through the thin structure than the Microsoft short from here to here. Not saying you can't take that trade, but just noting that this breakout point is a lot more meaningful. I would tend to think that the higher low reversal is top of mind at 415.25. So that's Microsoft. Next up is Google. What do we see out of Google? New all-time highs on Friday. Very, very simple chart. Again, here it is on a daily, breaking out to new all-time highs over this previous high. Just consolidation, blue sky territories, whole and half dollars, intraday levels that form. Any lower high in here starts to emerge as a head and shoulders. Treat it as a pullback. It's not end of the world. Pullback maybe comes in for the retest of the breakout point here at 171.65. Keep it simple in Google. Here's Amazon, Nancy, if you will. The short has played out twice now off of the 187.25. So back-to-back shorts off of that level have treated us well. Do we want to take it for a spin a third time? I don't know. This is just building out as a consolidation range at this point. So in the box, not really thinking about any aggressive trades here. If you want to be quick draw McGraw, maybe a breakout over this high to get you there. I mean, those types of things emerge, but your better structural trades are very simple. You're going to wait for a higher low over 187.25 and some enthusiasm around Amazon at all-time highs. If that doesn't happen, I would just start to think that this drift into this choppy zone can unfold. That's going to be a headwind for the broad market, noting what we sort of described over in the XLY as a sector, right? So that's Amazon. Let's move on over to NVIDIA, the one stock to rule them all. So before we go any further, daily time frame chart, options selling study set on. Want to remind you of the implied volatility. Implied volatility is likely going to increase on the Monday, Tuesday, and probably Wednesday session as well. And as soon as the number is released, implied volatility is going to absolutely crater like it has in the past every single time an earnings announcement comes out. So that means it's going to be very expensive to trade NVIDIA this week. You probably want to dial back expectations as we head into Wednesday session for sure. Monday, probably worth continuing to keep an eye on what's happening in NVIDIA. Let's just go back to our normal daily set over here and we'll take a closer look. This setup I was talking about in the intro of the session today is the retest of the top of the balance range in here. Notice a very reasonable pullback. Yes, it seems scary, down 2%, considering that the broad market itself was basically flat, 12%, 12 basis points, 8 basis points down out of the NASDAQ. But this retest of 922, which is also a historical level from over here, has the opportunity to offer a daily higher low, right? Lows, higher lows, higher lows, higher lows. Can this act in this area as a higher low? And if so, is there a pre-earnings run-up trade we can take based on the hold of 922? Let's zoom in a little bit further. There we go. So look below, fail back above, there's an inverted head and shoulders, right? That's a trade to me all day long, back up to the equal highs. You come even lower, you find a double bottom here off of the technical breakout point at 907.25. Great. It's the same idea with a little bit more of a roadblock overhead. You would trim here, then hold to see, if some runners can make the move back up into the equal highs. Regardless, the retest of the top of the balance range from in here is the top, or at least one of the top watches for me as we head into the upcoming week's worth of trade. If NVIDIA just absolutely craters and it drills down towards the bottom end of the range, I actually think that's going to be helpful from an earnings perspective. You would prefer to see the chart fall into a bearish structure ahead of earnings if the hedges basically are not going to be as required, right? People have downside hedges on right now because the structure looks bullish. If those hedges unwind, because let's just say that things come in fine, you'll probably see flat out of NVIDIA. If the hedges are to the upside and those hedges aren't needed, if there's a lackluster report from NVIDIA, guess what's going to happen? It's going to crater because those hedges are becoming unwound, right? There's basically going to be more stock coming up for sale based on the options market and sort of how the hedging takes place based on the put side of the chain, right? So anyways, not to get overly complicated, but a more bearish setup into earnings technically means that earnings might not be as bad. And a great example of that is Tesla. We'll get to that in just a moment. Anyways, AMD, let's take a look. AMD, and obviously all bets are off. We're not swing trading anything through NVIDIA. We're just intraday scalping that around some of the earnings volatility. AMD, I've got to give credit where credit is due. We've got to talk about the opportunity for perhaps an inverted head and shoulders happening here. You've got your left shoulder, head, right shoulder broken out over the neckline and actually holding on that Friday session, which to me is somewhat surprising in the face of the longer run pattern, which of course is the opposite, inverted head and shoulders. That neckline has also been recaptured. So I think it's stuck between a rock and a hard place. I think that there's been notable progress made in the upward direction. I think we'll be open-minded to trading it as long as the subsequent higher lows can be found over 158.50. If this turns into a double top and we pull back underneath 162.75, buyers need to step up at 158.50 and then we'll trade it back higher. If that doesn't happen and we just chop around in this box down below, I think it's back in no man's land. I think it turns into one of those names that we just breeze through very quickly. But those are my key sort of like it must happen. You've got to get the higher low there, otherwise I'm just not interested. Next up, metaverse. Let's go to the daily chart. Just we've been flip-flopping back and forth through. I want to point out that the gap is mostly closed, right, from the earnings gap down. It's been a non-stop move from the bottom to the top. A little bit of consolidation happening over here. I'd be open-minded to this turning into some sort of head and shoulders. Maybe we should draw that head a little bit more appropriately. There we go. If you were to flush under the neckline, it's still just looking for a daily higher lows over the breakout point at 443.25. So watching out for that as a possible indication here on the hourly side of things. You don't really get much more of a clean look. I think the head and shoulders is still technically trying to emerge. That's lower highs underneath 476 on the right shoulder. If you're looking for a flush here, I mean, not unreasonable to trade into the bottom end of the balance, 463. Those are my thoughts, though. Generally thinking about this, leading to a breakdown that's probably scalpable on the short side, then changing tone at 443.25 when and if we get there. To the upside, let's just bring back the daily, right? If there is going to be a recapture of this, taking it in stride, I think that this can act maybe as bull flag breakout, but I would want to see a firm higher low over that 484.60, and then the target is actually the opening print of that pre-earnings gap down day at 508.35. There's a thin structure breakdown there, right? Let's zoom out so you can see that there's really not much going on there. It was just thin structure, boom, right into those lows. Next up, we've got Tesla. So what we were talking about out of Tesla was the bearish setup into the earnings announcement. The downside hedges are unwound, and then the next thing you know, the stock is higher. So that's just the inverse of what we were talking about out of NVIDIA, which right now, NVIDIA has a bullish setup headed into earnings, right? So unless that changes, I would just sort of keep that in the back of your mind. Now, Tesla, it's not the cleanest trader, so I'll just give you the very quick over or under. You've got the midpoint of a range here at 173.50. If you're consolidating above, maybe this becomes top of mind. Higher low over 180, target becomes this, 185.75, monitoring for continuation. If you slip into the lower 50% of the range, it's this, it's underneath 167, targets this low at 158.65, and that's it. There's really not much more to say out of Tesla. It's been a very lackluster and sloppy chart inside of that box. Next up, Netflix. This is beautiful because it's offering bullish consolidation here after this massive run, sort of recapturing the earnings gap. But notice what happened on Friday. We had struggled a number of times. Failure above, failure above, failure above, failure above. We finally started to find higher low consolidation above 618. I'd be looking for follow through to the upside out of Netflix, technically breaking out of a massive bull flag, sort of consolidation range. So looking for upside as long as we're over 618. Upside targets are 631 and 636.65. Next up, JP Morgan, another very easy chart to be looking at here. Beautiful chart in the upward direction. Breakout of the resistance trend line just to sort of walk us through the origin of the move, right? Nice 2-day consolidation, new all-time high. Look at the hourly side as well. Look at the give and take, right? So pullback, this was not the cleanest pullback in here, but this pull, where was it actually? Where is the hold over 202.15? 202.15 on the morning session right here. This is the 930 bar. Anyways, this give and take, right there, previous resistance acting as support, very, very bullish. We broke this previous resistance, trying to use it as support on the Friday afternoon session. It's blue sky territories, $1.5 intraday levels overhead if we're over 204.25. If we break down underneath, I would be on the lookout for bull flag consolidation here to digest ultimately this larger run that we've seen in the upward direction. Your line in the sand, daily line in the sand, comes from the previous all-time high at $200.75. So this, as a daily pullback, is also very, very reasonable when you zoom out. As of right now, based on Friday's bar, wouldn't really be top of mind for a deeper pullback. Let's get into those 4 trade ideas. No stopping today. PEP, Pepsi is up first. What do we see? Bullish 3-bar play on the daily time frame chart. Little inside bar on Friday after a momentum bar breaking out of a long-standing resistance zone at 181.50. If you're over 183.15, looking for the target overhead at 187.35. Zooming this out, you can see that we had rejections. Rejections acted as support, acted as a little bit of support, kind of loose there, and then the opening print of that larger red bar, which is basically where we did not look back from when the breakdown was taking place. So that's your upside out of Pepsi. I'm interested as long as the consolidation is over that 181.50, and we're looking for the break of 183.15. Next up, we've got DELL, the dinosaur of tech. What's going on with DELL? A 4-bar play into blue sky territory. So again, large green bodied bar, sort of consolidation, inside bar on Friday. If we could take out those highs at 150.50, it's blue sky territory. So looking good out of DELL for an upside breakout there. It's in play, I would argue, as long as we're over the opening print of that Wednesday session at 140.15 will also stand as a nice round number. Intel, another dinosaur. INTC is the ticker on Intel. And what do we see out of this? So much cheaper price point. I would probably not opt to trade this with options and just go straight out equity on this. But, some sort of breakout over this to close the gap overhead is interesting. This potentially turns into a little bit more of a longer run swing idea instead of a day trade scalp. So again, if you want to avoid options, you're also avoiding the theta burn on them potentially. It's in play as long as we're over the double bottom neckline here, which is at 31.15, and the gap close overhead is over 32.25, closes at 34.55. Not interested if we're under the neckline and just chopping around near those lows. It's off our radar. Last but certainly not least is SBUX. SBUX is the ticker on that one, and another overhead gap to potentially close here. Here it is on the daily time frame chart. You could consider this a cup and handle. We're breaking out over the top of the cup here, over 77. We've got nothing but earnings gap to close overhead into 87.20. Now, let's be realistic. Is this going to happen in one day? Is it going to happen in 2 days? Is it going to happen in a full week? Maybe, maybe not. I would really not think that it's going to happen over the span of 2 or 3 trading days, but the idea is that we have thin structure to retrace overhead, and as long as you're over 77, the breakout is valid over the earnings gap down high and the top of the cup and handle formation that we had just illustrated. That's going to do it for today's episode of the weekly watch list video. If you enjoyed the video or learned anything new from today's session, let me know down below in the comments section or by giving the video a very simple thumbs up. We will be live at 8 o'clock on the Monday morning session for our standard episode of the pre-market prep, and look out for the midweek market update on Wednesday to take a deeper dive into NVIDIA's earnings. We'll see how the charts are looking once they announce their numbers. With that said, everybody have a green trading week, and I will see you in the next one.